Good afternoon. Welcome to the Real Estate Show with Kristie Brady of Strata Realty Group. And Kristie has a special guest in the studio today. Tell us who's come to join you today.
Every time we get close to closing and the words homeowners insurance comes up, the client is always really surprised. So I thought I would bring in my neighbor from Liberty Mutual, Mike Popp, to tell us a little bit about home insurance.
Hello,
Hi, Mike.
Kristie. How are you today?
I'm good, thank you. So one of the most common questions I get is the client is always asking, how much should I insure my house for?
Yeah, that's a great question. And what we run into is a lot of people will buy a house for X amount of dollars, and that's what they think it should be insured for. But realistically, we want to insure the home for what it's going to cost to rebuild it, not for what the market says. So we have specialized tools to help them determine amount, and sometimes it's more than what they're paying for it. Sometimes it's less than what they're paying for it. But we try to find the happy place of where that home should be insured for the right value. So if there was a loss, it will be completely taken care of.
Well, another question I get quite often is, if the client dies, will their home insurance pay off their house?
That's another great question. And no, the home insurance will not. The home insurance is meant to take care of exposures like wind, fire, theft, different exposures like that. But if a policyholder was to pass away, there's no protection to pay off that mortgage. However, we have different plans that are available, and it's essentially buying some additional life insurance to make sure that if you are gone and your spouse is gone, or God forbid, both of you are gone, that the mortgage will be taken care of.
So what about things like rings and TVs? Are those things protected in homeowners insurance?
Yeah, you definitely have personal property protection on your home insurance policy. Your normal things, couches, chairs, TV, clothing, dishes, kids' toys, all that stuff is covered underneath the policy. However, some things have special provisions on them, such as if you have a $10,000 diamond ring, and if that thing just happens to disappear, the diamond falls out of it, you're going to be very limited on coverage, where on those types of items we need to discuss to make sure if you do have them that we're insuring those properly as well.
So how do you determine what their rate is going to be?
Oh, rates, that's a funny thing. One thing that is determined rates is where you're at from a fire station, location, distance. Some companies still use fire hydrants to determine where your rate would be. It also looks at your personal life of, do you own pets? Do you have other claims that you have filed against your policy? And one of the biggest things right now that most companies are using, it's called insurance credit scoring. So even though that you might be the safest person in the world, if your insurance credit score is not the best, that could also drive your rates.
So we just had Jeremy Draper in last week on the show, and he was talking about the floodplains, and he mentioned special flood insurance. Do you guys offer that?
Yeah, flood insurance usually comes up at the time of when somebody's buying a house. A lot of times the mortgage company will determine, are they in a flood zone and do they have to carry it? So that is one thing. Other than that, what people don't realize is just because you're not in a flood zone does not mean that you don't need flood insurance. I usually talk to my clients that you're probably not going to be on your house waiting for a helicopter to get you. You're not going to be floating down the Humboldt. But what could happen is if you're on a basement and if your foundation leaks, or if a pipe breaks outside, or water comes in from the outside and then in, there's no coverage on a standard homeowner's policy. And most companies just write the flood insurance through the National Flood Agency. That's a government-sponsored program. So again, don't get hung up that if you're not in a flood zone, it still may be something worth considering if you're on a basement or have other issues that are surrounding water.
So let's say that a visitor gets injured on the client's property once they're closed. Are they protected in their homeowner's policy for any injuries that they may get sued for?
Yes, most homeowner insurance policies carry some type of liability coverage. Ranges anywhere from $100,000 up to $1 million, and different levels you can choose. You can even go higher than that. But it's if you're negligent or found negligent and have caused or helped cause injury to someone, then your homeowner's policy, if it meets all of their coverage requirements, could help protect you in the case of a lawsuit or if they want to come after you for different exposures.
Well, thank you, Mike, for that information. Before I hand the show back over to John, I just want to say congratulations to Brenna and Justin on their new house. I hope you guys have many wonderful years to come.
Thanks, Kristie and Mike. And don't forget, you can learn more about Kristie Brady at www.kristieonline.com or contact her by email at Kristie, Kristie, saleshomes @gmail.com, or you can give her a call in the office at Strata Realty Group, 775-385-7679. And remember to tune in every Thursday at 12:30 for the Real Estate Show with Kristie Brady right here on KZBI. And now back to the Glenn Beck program.